Okay, so let's start out by talking about the new reporting that is, or the new reporting requirements. Okay, so we'll talk about the new versus the old law. But before we do that, let's talk about Cash App. Okay, so Cash App is required to provide a 1099. Venmo must also provide a 1099K. So you should expect to receive a 1099K from Cash App and from Venmo. PayPal already provides 1099Ks. So that's going to continue. It's just a matter of the parameters, the limits. Those have changed. Credit card companies, as you know, you use Square, you use Stripe, you already or should receive a 1099K if you hit the parameters. Now, Zelle, on the other hand, now Zelle, they say that they don't have to provide a 1099K. So the question is, why? And I've heard so much chatter about people saying, well, Zelle said they don't have to provide a 1099. But the reason why Zelle said they don't have to provide a 1099, people aren't getting the reasoning correct, right? So why is Zelle saying that they don't have to provide a 1099? Well, they're saying that they are not a third party processor, right? Well, you know what? We'll talk about that in a moment. Let me switch slides for now, and I'll come back to that. All right. So the new law versus the old law. During the old law, and that was everything from tax return 2021 prior, you had to have $20,000 total in transactions and over 200 transactions. So it had to be a combination of the two, $20,000 and over 200,000 transactions. It wasn't 20,000 or 200, it was and. So if you did not receive a 1099, this could be the reason why, all right? Now the new law is saying that moving forward, anything over $600, you are required to receive a 1099K, period, the end. Now, this is something that has been required for years for example, if you hire an accountant like myself, or you hire a consultant or whomever, or if you're a booth renter and you are working in a salon, anyone that you pay over $600, you were always required to provide them a 1099. The difference, there was a difference between what we were required to do versus what third party providers were required to do. Now that has changed. Everybody is at that same $600 threshold, and the reason is because there are so many gig type jobs now, where in the past, when this rule was initially created, you didn't have a whole lot of, the gig economy wasn't here, right? People just went to work as employees or they were contractors, and that was pretty much it. But over the last couple of years, we have noticed, or not we, but the government has noticed that there were so many gig workers. And what really facilitated this, in my opinion, is PPP. When people who were not paying their taxes on all of their income all of a sudden said, oh, wait a minute, by the way, I also qualify because I actually made this amount of money as an independent contractor. But if you look back at the tax returns, it probably didn't show that they were reporting all their income. So I think a combination of the new gig economy and also what was discovered during the whole PPP loan thing, that the government said, my goodness, we're losing so much money. Okay, let's change this. Let's make these third party providers responsible for providing these 1099Ks, so that way we can get more. We can get more of the money that's out there. Now, be ready to provide your employer identification number. Okay, that's going to be needed in order for them to give you a 1099K. Okay, they're going to need an employer ID number from you. So at some point, you're going to be hearing from the Cash Apps and the Venmos requesting your EIN numbers. That's something that PayPal put into place a while ago, because I know when I first had my PayPal account, they didn't ask for any of that. But I think it was about 2 years ago, they required it. They required me to provide them with an EIN number. and I did. I think they even required an SS number and an EIN. I say if they're requiring either or, do not give a social security number. You don't want to do that because you don't want to have your SS number just hanging out there, right? So provide them with an EIN number. If you don't have an EIN number, it's really easy. Just go on to irs.gov, apply for one. You can get it in about 15 minutes or less, okay? So how do we get ahead of this whole problem? Because it's going to be a problem. What's going to wind up happening is when they start issuing out these 1099Ks, you're going to have people say, wait a minute, that was not income. That was that was me paying someone for, reimbursing someone for a meal that we had together, or I sold something to them, a personal item to them, and it really isn't income. So how do we begin to mitigate this eventual problem? Okay, number one, I will say the easiest way to mitigate this, which a lot of people probably are not going to do, but I'm going to say it anyway, is not to commingle funds. So if you have like a PayPal account, or you have I don't think Cashapp offers this yet, but I know Venmo offers a business account. So you always want to have a personal and a business account, just like with your regular bank account. Okay, you want to have a bank account that you use for personal and a bank account that you use for business. Same thing when you have a credit card. You want to have a credit card that you use strictly for business and one that you use strictly for personal. Well, keep that same concept going and do the same thing with these third-party apps like Cashapp and Venmo. Keep it separate. That's the best way to be able to argue your point. That's, if they have personal personal and business, they're not going to send you a 1099K for the personal side. Okay, if you have a personal account, they will send you a 1099K for the business. If you decide that you're just going to run everything through Cash App, then you're likely going to get a 1099K that is going to have both personal and also business. All right, so sign up for both business and personal accounts, like I said that. Another thing is you want to classify payments as amounts paid for something other than goods and services. So when you are classifying your payments, when you're making a payment or you're receiving a payment, or rather, from whomever, you want to make sure that you classify that payment as something other than goods and services. So like, for instance, with PayPal, it could just say sending a friend money, right? Or you can classify it as a service or something that you're selling. So you want to make sure you properly classify all of these transactions. And then you want to notate who the payment was sent to. Who do you send the payment to, or who did you receive the payment from? So on both sides, who did you receive it from and who did you send it to? Okay, that's important as well. Then also, what do you do if you receive a 1099K that includes non-taxable funds? All right, so if you receive a 1099K that includes non-taxable funds, which is going to happen, here's what you need to do. You're going to exclude the funds when filing your tax return. So let's say you get a 1099K for a total of $10,000. And when you go back and look at your records and you realize that, $2,000 of that is actually not income, okay? You're going to exclude that from your taxes. So let's say where it says total income, you're only going to pull out $8,000 as part of your taxable income. Now, in doing so, you want to make sure that you're maintaining documentations, proving that the funds are not taxable. Why? Is because if you ever get audited, you're going to need those documents as proof. If you don't have the documentation as proof, I can guarantee you that the IRS is going to reclassify that $2,000 from personal to business, and they're going to make you pay taxes on it. So it's important that you hold on to all of your documentation, receipts, whatever, and always notate, because I used to be an auditor for the Department of Revenue, and one thing that I always used to look for was documentation. Even if something can appear to be personal, if the person documented it in writing and said, or either writing or by typing in and said, this is what this is for, and on this date, I paid a special attention to that, because I was under the assumption that, let's say you're about to get audited. It's a very difficult thing for you to do, to grab all of your receipts and start to try to say, okay, well, let me see what I can write here. What can I write here? People either don't do it because they don't think about it, or they have to sit there and think way too hard. So usually when something is documented either in writing, there's some sort of notation to see, okay, who I gave the money to and what it was for. Usually it's true because that's something that you did about 2 years ago. Because usually when you get audited, the IRS can audit you within 3 years of your tax return being due, right? But they'll normally audit you around maybe the second year, going into the third year. At that point, you've forgotten everything that happened 2.5 years ago. You barely remember what happened yesterday, right? So if you have that documentation from 2.5 years ago, and it's well documented, I used to say, okay, this looks good, and I will let it go. Okay, so you want to hold on to your documentations for a minimum of 3 years. Why? From 3 years from the due date of the return. So let's say, for example, this is 2022, and we are now in the 2021 tax filing season, right? So 2021 tax return is due April of 2022. So the IRS has 3 years from April of 2022 to audit you. So that's April, let's say at 22. So they have until 2025 to audit you. So you want to hold on to those receipts for at least 3 years. If you file an extension and you don't file your return till October, then they have 3 years from October of 2022 to audit you. Now, if you file it late, or if you never file it, then there is no deadline. They can audit you whenever. If you file it, let's say in December of 2022, which means that you're already late, they have until December, 3 years from then to audit you. And the reason why I say keep it for 3 years and maybe even 7 is because you can get audited up to 6 years. If the IRS suspects fraud of any kind of fraud, they can audit you up to 6 years. If they don't suspect fraud, it's going to be up to 3 years. If they suspect fraud, it's going to be up to 6 years. So you want to hold on to the receipts. I just add an extra year on there just because, right? Just for the heck of it. So keep your receipts that long. And I think there are probably going to be quite a few audits for this particular subject, because the IRS, they know that people are going to try to trick them. And I'm quite sure they're going to have a few audits. And when they audit you, they're not going to audit you necessarily your entire tax return. Like when I used to be an auditor, I would request, okay, I want to audit your meals and expenses. I want to audit your 1099K income. So if I'm auditing just your 1099K income, that means that I'm going to request everything I need to audit just your 1099K income. I'm not even going to look at all the other stuff. The only reason I would look at all the other stuff was if something unusual piqued my curiosity, then I might dig into something else. But for the most part, I just kept it to what the scope of what we were auditing. So there will be a lot of letters going out saying, okay, well, we want to review, or we want to audit your 1099K income. And if that happens, you want to make sure that you have all of the necessary documentations to support whatever it is that you're claiming. Okay. Now, before we get into misclassifications, let me go back and talk about Venmo. Is it Venmo? Zelle, and why Zelle says that they don't have to provide a 1099. It's because they say that they are not a third-party processor. They say that they are I would say messenger, so to speak. The way that Zelle works is, if I Zelle you money, I'm Zelling you money directly out of my bank account, and I'm Zelling it to I'm putting it into your account. So what Zelle says they do is they say that they only inform the parties that a transaction has taken place, that they are not actually processing it. Whereas when you have someone like Square and Cashapp and PayPal, they actually process the payments. They process the payments and then they send it to you. Zelle doesn't do that. They don't process the payment. Your bank processes the payment. So they're saying that they're just like a messenger in between. So therefore, they are saying that they're exempt from this. Now, whether that's true or not, it makes sense. But one thing I do know is that sometimes when the IRS comes out with new rules or new laws, they don't necessarily see everything, right? So then what happens is once the law is in place, they start to go in and they make adjustments. They go in and they change things and say, okay, well, yeah, we see why you said that there's a loophole for you, Zelle. However, no, we want you to do the same thing. So in my opinion, what I'm doing and telling my clients to do is just record everything. Just keep track of everything. That being said, I do have a spreadsheet that I created. And if anyone is interested, let me show you the spreadsheet first. And if you're interested, I can just send it to you as part of being on this webinar. I'll just send you a link to access it. And if I can figure out how to, let's see, maybe if I click on stop sharing, because what I want to do is I would like to change screens. And let me see, screen, there you go. Here it is. All right, it's right here. So let's change it. So if you can see my screen, can you please just put a 2 in the chat box? If you can see my screen. I know there's some sort of delay, so I have to sit here and wait for you guys to put a 2 in the chat box. So if you can see my screen, put a 2 in the chat box. Okay, good. Good. Okay. All right. So here is something that I created. Now, normally I create my spreadsheets in Excel, but I wanted to make Carla said 2. That means you can really see. I like to create my spreadsheets inside of Excel, but just for ease of sharing, I decided to create it in here, Google Map. Not Google Maps, sorry, inside of Google. So basically what I've created a tracker. It's really simple, and you may or may not need it. You know, you may not have use for it, but for those of you that may have use for it, here is what it is. Okay, so I've created something that has the date. So let's say you go out with somebody a particular day. You want to go ahead and you want to include the date of whatever the date the transaction occurred, right? So you're going to right click with your mouse twice and you're going to choose the date. So we'll choose the 28th, right? Now, was this a Cash App? Was it Venmo? Was it PayPal? What was it? Well, you can click on this little down arrow and let's just say it was a Venmo payment. You're going to click on, so you have an option to click either Cash, Venmo, PayPal, or Zelle. So we're going to click Venmo. Who did you send it to? Well, we sent it to let's just say Miss Smith. And how much was this for? How much did you send her, or how much did you receive? So it's coming or going, okay? Because really the person that receives the money is the person who is going to also receive the 1099K, okay? So if you're receiving the money from someone and that is not income, you want to notate, okay, on this date, Venmo processed from Miss Smith $100, right? And this $100 was for the sale of purse. Now, keep in mind that when you sell stuff, okay, you might use Cash App, you might use Venmo, you might use PayPal when you sell your personal items. When you sell your personal items, that is not taxable, okay? And it's not taxable because you might, more than likely, when you're selling something used, you're selling it for less than what you purchased it for. If you sell it for more than what you purchased it for, then it becomes taxable. But in that case, that's not usually the case. Usually we're selling stuff that we don't want anymore. We're cleaning out our closets. Then we're like, okay, well, clean out my closet and I'm selling ABC. Not like you're on Poshmark or something, but let's just say, well, even then, because when if I'm doing your taxes and you're on Poshmark and you're selling something that a used item that you owned, and you're selling it for less than what you purchased it for, well, that isn't really it's not really taxable. So anyway, so let's say you sold a purse and you purchased the purse for $100 and you wanted to get rid of it, cleaning out your closet, and you sell it for $50. Okay, well that's not taxable, right? So let's assume that happened. You sold a purse for $100 that you paid $200 for. It's not taxable. Then what you want to do is you want to include the receipt that you either sent out, or whatever came in, whatever sort of documentation you have showing that $100, right? Showing the $100, and then also showing what the transaction was for. In this case, what I did was, for this particular transaction, the Cash App to Miss Tina, I attached the supporting document. When you attach the supporting document and you just hover over it, you'll see, oh, okay, we went out to dinner. It was a reimbursement for a meal, $16.20. So you can see it right there. If you have to download it, you can download it. The key is you want to keep everything in one place. Now, in order to be able to do this, you want to right click the mouse and then click on insert link. You're going to include the link right here, and then you're going to just say what it is. Receipt for sale of purse, or invoice that I sent out for the sale of the purse, or after you sold the purse, after you received the money from Cash App, you receive some sort of, I don't know, invoice or whatever they send you after you purchase something or sell something. You're going to include that here, so you have access to it. Now, in order for you to create a link, those receipts have to be in the cloud. I keep my stuff in Google, so I can just go get a link from where it is. If it's a Google Doc, I'll go get a link from there. Then I'll just copy and paste the link here. If it's in Dropbox, go get the link from Dropbox, throw the link in here. If wherever the link is, go find the link on the web, add the link here, click apply, and then whatever the supporting documentation description is, add it here, and then you'll have access to it at all times. So now what you can do is you can see all of the transactions that you have processed through whomever. So let's just say we have Cash App here, we've got Cash App here, we have Cash App here, we have Venmo here, we got Venmo here, we have Venmo here, and let's just throw PayPal in there just for the heck of it. We've got PayPal, and PayPal. All right, so then we are going to just drag this down. Let's just drag this down. All right, so now we want to know, all right, so we have all of these transactions. How do I know which one is Cash App? How do I know which one is Venmo? How do I sort this? So the way that you will sort this is you will you highlight column B, click on data, click on filter view, and say create new filter view. So you've created a new filter view. Now we want to filter this by, all we want to see are Cash App transactions. So click on this little doohickey right here. And then you want to unclick this, unclick this, unclick this, click OK. Now you see only Cash App, and you want to see how much was received. Well, you can just go in here and drag down and look at the bottom right-hand corner and see $316.20, and you have access to the receipts here. That's a quick way to try to figure out, well, how much did I get from Cash App? How much did I get from Venmo, PayPal, so on and so forth. So that's how this thing works, little tracker. It's really simple, no big deal. So for us to take the filter away, go here, click on data, and then say you want to delete all filters, and then we're back to normal. Okay, so that is how you use the tracker app. So